What if your dollars are soon to be worth nothing? Do you think such a case is possible? With the development of cryptocurrency, banks and governments have panicked due to their inability to control the crypto market. Digital currencies began to grow very quickly, and now Bitcoin at its peak cost $71,000. Will this technology be able to replace the usual dollars and euros? Today you and I will try to answer this question. With the emergence of Bitcoin in 2009, a new era in the world of finance began. Cryptocurrencies such as Bitcoin caused a huge interest and generated a lot of discussion. Many believe that cryptocurrency could replace traditional fiat money in the future. In this video, we will look at what fiat money and cryptocurrency are, their pros and cons, and the prospects for cryptocurrencies. Fiat money is a national currency that is regulated by the central bank and is recognized as legal means of payment in the country. Simply put, it is our familiar euros, dollars, and other currencies. This money can be in the form of cash, coins, and banknotes, or non-cash, bank accounts, electronic money. There are three main advantages to fiat money. First, fiat currency rates are relatively stable due to the control of central banks. Second, fiat money is accepted and recognized by most countries in the world. And finally, the system of bank cards and electronic payments makes the use of fiat money easy and fast. However, fiat money also has its weaknesses. First of all, they are subject to inflation, which can reduce their purchasing power. Central banks and governments can control and regulate fiat money, which limits the freedom of users. In addition, cash is often used in illegal scams and corruption. Cryptocurrency is a digital or virtual currency based on blockchain technology. By the way, we have a full video about blockchain on our channel. Go over and watch it. Moving on, the first and most famous cryptocurrency is Bitcoin, created in 2009. Since then, many other cryptocurrencies have appeared, such as Ethereum, Ripple, Litecoin, and others. Cryptocurrencies also have their benefits. First, they are decentralized and not controlled by central authorities, making them independent from governments and banks. Second, cryptocurrency deals are usually anonymous and protected by cryptography. Third, cryptocurrency transfers are often cheaper and faster than bank transfers. However, cryptocurrencies also face challenges. First, the exchange rate of cryptocurrencies can be highly volatile, making them unstable. Second, many countries and companies still do not accept cryptocurrency as a means of payment. And third, some governments may put restrictions or bans on the use of cryptocurrencies. Let's go a little deeper into the history of cryptocurrency. It begins with the publication of Satoshi Nakamoto's White Book in 2008, which introduced the concept of Bitcoin, the first decentralized digital currency. In January 2009, the first Bitcoin block, known as a Genesis block, was released. Nakamoto designed Bitcoin as an electronic cash system that does not require trust in central authorities or intermediaries. Unlike traditional currencies, Bitcoin and other cryptocurrencies are powered by the blockchain, a distributed database that records all transactions on the network. The idea was to create a decentralized currency that is independent of banks and governments. Bitcoin quickly attracted attention as a medium of exchange and investment tool. After Bitcoin, other cryptocurrencies emerged with different purposes and functions. Ethereum, for example, offers a platform for creating decentralized applications and smart contracts, expanding the uses of blockchain technology. Initially, Bitcoin was used mainly by enthusiasts and technology experts. However, over time, it began to attract the attention of the general public and investors. One of the first known instances of Bitcoin being used to purchase real goods was a transaction in 2010 when programmer Laszlo Hanic paid 10,000 bitcoins for 2 pizzas. This event was an iconic moment in the history of cryptocurrencies and showed their potential as a medium of exchange. By the way, 10,000 bitcoins are now worth about $500 million. After Bitcoin, hundreds of other cryptocurrencies emerged, each offering unique features and applications. Ethereum, launched in 2015, has become one of the most popular cryptocurrencies due to its platform for creating decentralized applications and smart contracts. Other cryptocurrencies, such as Ripple, Litecoin, and Monero, have also found their niches and attracted significant attention from users and investors. Cryptocurrencies continue to grow and attract the attention of the investors and everyday users alike. One of the key trends in development of cryptocurrencies is the expansion of their acceptance. Gradually, more and more companies and organizations are beginning to accept cryptocurrencies as a means of payment. For example, in some countries, such as Venezuela, it is already possible to pay with bitcoins and other cryptocurrencies in regular stores. Banks and financial institutions are beginning to explore the use of blockchain technology and cryptocurrencies to improve their services. This could include creating their own digital currencies, such as the digital yuan in China or the digital euro in the European Union. Developers continue to work on improving blockchain technology to make it faster, more secure, and more scalable. Whether cryptocurrencies will replace fiat money remains an open question. On the one hand, cryptocurrencies have many advantages, such as decentralization, anonymity, and low fees. On the other hand, they face challenges such as high volatility, meaning the price is constantly changing, limited acceptance, and regulatory risks. In the near future, it is unlikely that cryptocurrencies will completely replace fiat money. However, they can become an important addition to the existing financial system. Many experts believe that the future lies in a hybrid system in which cryptocurrencies and fiat money will cooperate and complement each other. Cryptocurrencies are an exciting and promising technology that has the potential to change the financial system. However, at this stage, they cannot fully replace fiat money due to a number of limitations and risks. It is important to continue to monitor the development of this field and explore the opportunities and challenges it brings. Fiat money and cryptocurrency have several key differences. First, fiat money is a legal means of payment that is recognized by governments and regulated by central banks. Cryptocurrencies, on the other hand, are decentralized and not controlled by any central authority. This gives users more freedom, but also creates certain risks and challenges. Secondly, fiat money usually has a stable exchange rate due to the policies of central banks. Cryptocurrencies, on the other hand, are known for their high volatility. For example, the value of Bitcoin can fluctuate widely in short period of time, making it risky to invest in and use as a medium of exchange. Third, fiat money is accepted in almost every country in the world, while cryptocurrencies have limited acceptance. Although more and more companies and organizations are beginning to accept cryptocurrencies as a means of payment, they are still not widely accepted. However, fiat money also has its disadvantages. They are vulnerable to inflation, which can reduce their purchasing power. Central banks and governments can control and regulate fiat money, which limits the freedom of users. In addition, cash is often used in illegal schemes and corruption. One of the key technologies behind cryptocurrencies is blockchain. It is a distributed database that records all transactions on the network. Each block in the blockchain contains multiple transactions, and new blocks are added to the chain in time order. Blockchain provides clarity, security, and unchanged data, making it ideal for use in financial transactions. Blockchain has the potential to significantly change the financial system. First, it can reduce the cost and time of transactions. In the traditional financial systems, transfer between countries can take days and require significant fees. With blockchain, transactions can be conducted almost instantly and at minimal cost. Second, blockchain can increase the security and transparency of financial transactions. All transactions are recorded on the blockchain and cannot be changed, minimizing the risk of scams and errors. Blockchain can also help develop new financial products and services. For example, smart contracts running on the Ethereum blockchain can automate the performance of contracts and agreements. This can reduce the need for intermediaries and simplify many business processes. Gradually, more and more organizations and companies are beginning to accept cryptocurrencies as a means of payment. In some countries, such as Japan and South Korea, cryptocurrencies already have significant acceptance and are used for various financial transactions. In other countries, such as US and the European Union, there is an active discussion and development of a legislative basis for the regulation of cryptocurrencies and blockchain technologies. One example of cryptocurrency adoption is Venezuela, where Bitcoin and other cryptocurrencies have become popular due to hyperinflation and economic crisis. With fiat money quickly losing value, cryptocurrencies have become an alternative means of savings and exchange for many Venezuelans. Companies are also beginning to integrate cryptocurrencies into their business models. For example, big companies such as Microsoft and Overstock accepted bitcoins to pay for their goods and services. Financial institutions such as banks and investment firms are also beginning to look into using blockchain technology and cryptocurrencies to improve their services. As I said, cryptocurrency have risk and regulatory issues. In some countries, governments are introducing strict policies to control and regulate the use of cryptocurrencies. For example, China has banned cryptocurrency trading and initial coin offerings (ICOs). In other countries, such as the US, regulators are actively developing rules and regulations to provide safety and consumer protection. One of the key issues is making cryptocurrency meet anti-money laundering and countering the financing of terrorism requirements. Therefore, regulators are looking to put in place mechanisms to identify users and track suspicious transactions. In addition, there is a risk of hacking and cyber attacks on cryptocurrency exchanges and wallets. In recent years, there have been several major cases where hackers stole millions of dollars in cryptocurrency. This hurts user and investor confidence in cryptocurrencies and calls for development of more secure methods of protection. The future of cryptocurrencies and fiat money. So what's the bottom line? In the near future, it is unlikely that cryptocurrencies will completely replace fiat money. However, they could become an important addition to the existing financial system. One possible case is the creation of central bank digital currencies. CBDCs can provide the stability and acceptance of fiat money and the speed and low fees of cryptocurrencies. Thus, the future of finance may involve the harmonious coexistence and integration of both cryptocurrencies and fiat money. It is important to continue to follow the development of this field and explore the opportunities and challenges it brings. In the end, the choice between cryptocurrencies and fiat money will depend on the needs and preferences of users, as well as the regulations and acceptance of the technology on the global level. We have more videos about cryptocurrency and making money on our channel. Go and watch them. What do you think? What are the future plans for cryptocurrency? I'd love to hear your opinions in the comments. The Team Token was with you. See you in the new video.